welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me Shail Bhatnagar. Well, the Nifty has snapped its 3 days of a fall as of yesterday, although it's been nearly a week since the Nifty has been consistently stuck in a 300 point of a range. Remember, the broader markets have continued to do well as of yesterday as well. We saw the Nifty small cap index hit a record high in the intraday trading session, and the index has now rebounded 13% from its November lows as well, and has at least more than 70 stocks within this index, giving returns of over 10% in this period as well. Apart from the broader markets, the several sectors that have been doing well are those pockets that have been erstwhile favorites. So railway stocks are coming back in flavor. Most of them have actually seen a rebound of anywhere between 20 to 30% from their November lows as well. Cement stocks are coming back in focus. Some energy names are also coming back in focus. Power, renewable energy, these are the themes that are actually ongoing in the trade. Thursday again will be the weekly expiry of the Nifty 50 options, and we'll see how the markets really move forward after the range bound trade has played out throughout the week. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. As pointed out by Sakshi, the weekly expiry of the Nifty in the last 4 trading sessions, which is Friday, Monday, Tuesday and Wednesday, has seen the index range bound in a 200 point range, which is 24,800 is not something that the bears are willing to give up, and 24,600, 24,550 is not something to do away. So in this narrow trading band is what the Nifty has moved over the last 5 sessions. And why is that moved into a narrow trading band? Well, in the previous 3 weeks before last Thursday, the Nifty had accelerated about 1,000 points, and these 1,000 points are being digested. All put together, if you add Thursday's total, an average of about 1,300 points was added in the Nifty over the last 15-20 trading sessions. And of course, the Bank Nifty too, it's stronger than the Nifty. It had added about 4,000 points. So the last 4 sessions have been given to consolidation. But that doesn't mean that there has been no action in the market, ladies and gentlemen. Ever since weekly expiries have been removed by the market watchdog, the entire speculative and trading action has shifted to stocks. Those who had a standard deviation of 1.5%, 2% on a daily basis are now moving 3 or 4%. Wherever you see lower market float, such as counters like ITI, you see a very heavy action. 20% circuits, 10% circuits, 5% circuits are now routine. So good days are back for people who trade and invest in cash stocks, and of course you have nice fluctuations on weekly expiry days, and that is what is expected of Nifty today. What else is likely to move? Today I'll show you the stock chart of Nasdaq. Sakshi, if you remember, we had talked about 20,000 coming on the Nasdaq fairly soon, and that's how life is for those people who track the Nasdaq 100. New fresh start. Yesterday's rally was a 300 point uptick on the Nasdaq, and it has taken it up into a new orbit, a higher orbit, ladies and gentlemen. Fresh life for the Nasdaq begins beyond 20,000 points. And at the same time, I'll also like you to see the Nifty IT index. Again, a record high yesterday, and this is exactly a mirror image of the Nasdaq. Very little difference you can make out in the Nasdaq daily chart and the Nifty IT daily chart. Both of them are almost similar to each other, and this, ladies and gentlemen, has turned out to be one of the finest investments over the last 1 year or so, which is the Mafang ETF, Mirai Asset NYSE fund, in which you have 11-12 of the top Nasdaq 100 stocks. This was a very concentrated ETF which was available at 36-35 rupees in November of 2023, and it has hit a record high of about 130 in yesterday's trade. So this, ladies and gentlemen, is how you use ETFs cleverly to create long-term wealth for you. For those who have had a longer term memory, there is another ETF called Motilal Oswal Nasdaq 100 ETF, which is exactly a mirror image of the Nasdaq ETF, Nasdaq index, plus it gives you 4 percentage points extra, which is the rupee depreciation versus the dollar. All put together, the Motilal Oswal Nasdaq 100 fund has appreciated anywhere between 19 to 21% CAGR for a decade, and that itself is a phenomenal return. So keep an eye out on IT stocks. The rally, the good time has just started there. Of course, for those who have been invested earlier, well, good times are going to get into better times. Apart from that, metal stocks will remain in focus. Vedanta has an event that is about to happen, as also some interesting developments that are going to come into Hindustan Zinc, which is into a long-term consolidation phase. Aluminium is going to be in focus, which means National Aluminium and Hindalco will be in focus. The government may either put in an extra duty on finished imports of aluminium, which means that domestic industry will have a leeway, or it will cut the duty on raw materials. In any case, it is doing all that it can to protect local industry. So keep an eye out on metal stocks, keep an eye out on aluminium companies, and of course IT will be in top shape. Let us see what the Nifty does today, and at the same time the small caps and the mid cap indices will continue to make fresh highs. Small cap index is already at a record high. The mid cap will follow suit in the next 1 or 2 sessions. With that, let's get back to Sakshi and try and understand what happened on Wall Street yesterday and what have our foreign friends done on the Wall Street last evening. Sakshi.
Absolutely, Shail. So after a couple of sessions of being net buyers in the cash markets, foreign institutional investors again turned net sellers on Wednesday. They sold shares worth about 1,012 odd crore rupees on December 11. Contrastingly, domestic institutional investors bought equities worth about 2,007 odd crore rupees. Now, as far as the US markets are concerned, remember the tech-heavy Nasdaq surged to a record high, closing above 20,000 mark for the first time as well. This is after November's inflation report has also met expectations, fueling hopes for an interest rate cut from the Federal Reserve right there. The CPI has risen 2.7% in November compared to the same period last year, up from 2.6% in October too. The increase has met the expectations of the analysts, and investors are now breathing a sigh of relief. Now, in the US, we saw the Nasdaq up by about 1.7% to all those all-time high levels. Like I pointed, 20,034 was the last closing point. S&P 500 gained about 0.8% in trade, whereas the Dow Jones fell by 0.2% despite the gains from major companies like Nvidia and even Tesla. Now, following this, the Asian markets, they opened higher, now are turning mixed. ASX 200 was marginally down. Nikkei was, however, up by 1.3%, outperforming the Asia markets. Kospi up by 0.5%. Hang Seng also 0.3% higher. The SSE China, however, just marginally lower by 0.1%. The GIFT Nifty is now indicative of a start at 24,735, marginally on the lower side right there. When we talk about the kind of expectations that we can have from India markets, remember we will also be reacting to Asian Development Bank now, which has lowered India's growth forecast for the current fiscal year, that's FY25, to 6.5% from 7% earlier. So that's something that we will be looking at. Also, apart from this, we'll also focus on a whole host of stocks then. Gland Pharma will be in focus. The company has received an approval from US FDA for its phytodione injectable emulsion USP. And we'll also focus on Reliance Power. We rarely discuss this stock. Now, the company's subsidiary has secured a large solar energy and battery energy storage system project at 930 megawatts from the SECI. So that's something that we will be keeping a keen eye out on. Maruti will be in focus. The auto major will now expand its service network by adding 2,760 touch points by FY31, which is a jump of 53%, which will take the total number of such centers to 8,000 across the country. So we'll keep an eye out on that one too. Apart from this, we'll also focus on Acme Solar Holdings. The recently listed company has now secured a 250 megawatt firm and dispatchable renewable energy project from e-reverse auction held by NHPC on December 10th at a tariff of 4.5 rupees per unit. Shriram Finance, the stock has been in focus the stock price has been hovering higher. The flagship company of the Shriram completed the sale of its entire stake of 84.4% in the housing finance subsidiary Shriram Housing Finance Limited to Warburg Pincus, which is a global leading growth investor firm, for a consideration of 3,929 odd crores. So that will be in focus too. From the FMCG space, I'll keep a keen eye out on Imami. However, here there is a fine that's been imposed by the Central Delhi District Consumer Dispute Redressal Commission for the unfair trade practices regarding one of its products, which is a popular product, and that's to the tune of Fair and Handsome Fairness Cream. So we'll keep an eye out on that. Vedanta will be in focus yet again. The board will now mull fourth interim dividend on equity shares on December 16 for fiscal year FY25. So we'll keep an eye out on that too. So those are some of the stocks that we can look at today, Shail.
8:47, ladies and gentlemen. We are waiting for a very power-packed panel to join us today. Shortly, Devin Choksi, MD at DR Choksi Finserv Private Limited, will be with us. And a little later, when the markets open, Ms. Shibani Sharkar, Senior Vice President and Executive Fund Manager and Head for Equity Research at Kotak Mahindra AMC, will be joining us. Devin Bhai is already with us. Namaskar and a very warm welcome to you, Devanji. Weekly expiry today, but a nice consolidative phase in the market over the last 4 or 5 sessions. How do you see sentiment on Dalal Street, and in particular one stock, which is Larsen and Toubro?
Good morning, Shail. Good morning, Sakshi.
Good morning.
Well, I think the momentum is back. As far as I think the market participants are concerned, they have started chasing the momentum-driven stocks, and include some of the mid-cap, small-cap companies. Probably, I think the grip is much on these particular counters, and as a result of which, I think they are pushing these counters to near levels after having seen in the October and November month a sharp correction in the prices. I'm not completely surprised though, because I think today the game is of liquidity, which is basically chasing the smaller liquidity-driven stocks. I think are being chased by larger liquidity-driven funds who are operating in the market, and probably I think that's the reason for which I think this momentum is around. Live with that momentum, I think, as I see it, I think for the timing, and probably stay focused on your fundamentals as far as the investment portfolio selection is concerned. L&T kind of companies definitely means that I think the fundamental outlook on the business has to be studied well. This company has been cornered in significant, and as we talk today, I think they have the visibility in above, I think, 4 years of execution, and that's important for a company like L&T. So, continuously spending money on the infrastructure, and so is the industry hereafter. So obviously, I think the likes of L&T would definitely have a little bit better time. Also considering the fact that there is a significantly large presence in the Gulf region, in the Saudi region in particular, where probably the newer developments are happening at a rapid speed, I think this company is definitely having better times going forward. Fortunately, they command a better margin compared to what they are in India, out there in the other markets of the world. So that's where probably I think one can look for relatively stable to higher margin regime for this company over the next 3 to 5 years. One should remain bullish, but at the same time, buying opportunity is best when you get the stock available at a corrected price in the market.
Okay. Very good morning to you, Devin sir. I also wanted to get a sense on the small cap space, which is now continuously soaring at record high levels. Just a few months back, there was a lot of clamor about a lot of froth existing in the mid and the small cap space. Even the funds were asked to not take lump sum money for some bit of time as well. A little bit of consolidation, and again we are seeing small cap stocks at record high levels. They recovered 20-30% or within the index also from their lows. How are you really looking at this space right now? Do you think a lot of the froth has been taken out? Can one really look at this afresh, or do you think still a lot of risk persists here, sir?
So my reading says actually the valuation-wise, many of these companies are actually, I think, once again scaled back to its previous highs, and to a greater extent, I think that is a cause for concern also. because on one side you have the ability to execute, which is limited. On the other side, the market is giving you the premium for growth, which is not going to happen, I think, in a shorter period of time. It's going to take a longer period of time. So one will have to be extremely mindful about the entire process, I think, which is happening currently. As I see the typical habit of the trader out here, on one side you are having the new IPOs coming in, so he requires money to put into those IPOs. On the other side, this scarce liquidity-driven small cap stocks are available in the market, where I think probably you can make quicker money by taking the larger positions. And in turn, I think fund your IPO related activities. So this is a typical shift which is happening from the small cap to the IPO at this point of time. And that's where I guess I think the momentum is driving the stock prices. One will have to be careful about the valuation which they are buying. If you end up buying at a wrong valuation, probably I think the wait is going to be very, very long, even if the businesses are good from the long term perspective.
Devan bhai, there is a growing view in the market that till January 20th, the date when Mr. Donald Trump assumes the presidentship for the second time in the United States, you will see a rally in the US markets and a mirror image of that in India. And then this is a time basically people are saying to clean out your portfolio, to probably raise further cash, and then beyond Jan 20th you will see an extended slump both in the US markets and therefore in India as well. How do you see this explanation, and how do you react to this? By the way, Sakshi, an important development has also happened. Mr. Elon Musk has become the first man in the planet to have a wealth beyond $400 billion. And ever since Mr. Trump won the presidency, each day Mr. Musk has earned $4 billion. Devan bhai, your view?
I guess I think it's a fortune that he has made. Exceptionally brilliant person as far as entrepreneurs is concerned. And I think the kind of businesses that he has been building, I think it's something which I think the world is aiming for. Leave aside that part of it for the time being. But I believe that if he is employing the Dodge program, which the Trump government is wanting to implement, and if Elon Musk has to play a role there, I believe that I think the kind of AI that he has implemented is going to be a game changer, especially for America's government and the bureaucracy, for the cost-cutting measures that they want to implement, and I think probably bring the benefit to the country. It's going to be a game changer. I think I'm quite fascinated to experience the humanoid development which he has done, and that's going to be a game changer in next 2 years' time, that's for sure. Uh, I believe that I think overall environment in the US and India should remain conducive for growth. That is what my take would be. Because the new government coming into USA, definitely I think there will be enough amount of excitement, some amount of growth, and I think good amount of trading activity taking place. But at the same time, I think the opportunity size is becoming very, very big. If US is becoming made in USA kind of a program, if they are adopting, then in such situation, I would think that the larger amount of business opportunity will get created in US, which unfortunately did not get created after COVID in last 4 5 years. I believe that I think there's going to be I think benefiting India as well, because India is a strong ally partner to US's growth program. And as I see it, I think we should be seeing the China plus advantage completely in our favor in next 4 years. So I see as a very exciting time going forward in next 4 years. As long as I think we have our head on our shoulder well placed, I believe that I think we are going to see significant amount of wealth creation in our portfolios in next 4 years time.
Devin sir, you did talk about the IPO space, so I just wanted to get a sense there from these new IPOs that have opened. Is there any that shows you promise for the long term? We've seen MobiKwik get a very quick response, 7 times subscription on just day one. Vishal Mega Mart completely an OFS of 8,000 odd crore rupees, and Sai Life Sciences, where again there is a lot of concern about fundamentals valuations as well. How are you advising investors to really look at this new band of IPOs?
Well, I think some of the businesses are definitely promising. They have a roadmap ahead, and definitely I think they deserve to be there in the listed market. I'm not ruling them out for the sake of it. But the fact remains that if one has to see the business model sustaining for some of these companies, one will not get enough amount of confidence that the valuation which these companies are making everybody in the market. And that's unfortunate part that the current valuations are undermining the kind of lacuna or the shortcomings which is there in our IPO market in the auctioning system or maybe bidding system as we call it as. I have been vocal about this particular subject for some time now, that current IPO process needs to be changed. Inviting the bids, creating the book, and making the allotment basis of rationing basis is not a good idea at all, especially when we are in a today's world where everything is online and in a matter of seconds, I think you are having computing happening now. I think that's where probably the regulator will have to be a little bit more mindful. They should not be waiting for, I think, some major crackdown happening in the IPO business. Vis-a-vis that, I think they must try and take the actions, especially I think correcting the weaker systems that we are following in the IPO market. Maybe it's a long subject which we can discuss at length at some other point of time. But short point here is that the companies which are debating in the market, they are relatively good. They have a business to talk about. I'm not sure about their valuations. So that's a caveat, that's a disclaimer line that I would like to put across.
Yes, sir. MobiKwik is winning a lot of admirers. This is the second day of its IPO, and in terms of price, in terms of deployment of funds, and of course in terms of the market capitalization post the issue, it has checked all the boxes. And Sakshi, I think in 1993 you would have been in kindergarten, but the IPO of SBI came, and the government said this is a bank that has been set up by public money. So anybody who applies will definitely get 50 shares. And that is how, the public shareholding of SBI came about. I'm not sure whether Devin Bhai remembers or not, but I distinctly do. So I applied for 50 shares and I got 50 shares. Wow. And the IPO was for 90 rupees at that point of time. This is a 1 face value stock. At that point of time, it was a 10 face value stock. So you can well imagine the kind of wealth that has been created. But yes, there needs to be a relook at the IPO allotment guidelines to see this kind of a massive uptick that happens on the first day, and then the stock slumps for 6 months. Look at Tata Technologies, priced at 500 rupees, I think, listed at 1300, and that price hasn't come back ever again so far. Anyway, ladies and gentlemen, let's look at how the pre-open is shaping up. 80 points higher on the Nifty, and let's look at ICICI Bank. Wow, I wish this were true. 47 rupees higher, 1374. Now it's just slumped back -4. L&T 33 rupees higher, 3945. Remember, ladies and gentlemen, we've been talking about L&T, which is now at a record high ever since it was below 200-day DMA, to add this to your portfolio. Even at current levels, L&T is something that you can look into, as Devin Bhai very rightly points out. Stock of the day yesterday was Bajaj Finance. Let's look at what it is doing now. Flat at the moment. Kotak is 15 rupees 30 higher. This will read just lower, 18 rupees 10 for you. Reliance is 6 rupees 10 lower, 1271. Axis is 7 rupees 25 lower, 1140. And HDFC Bank is well, for some strange reason, 5% lower, but this will again readjust for the better. A very, very quick look into NSE 500, and then we'll again get back to Devin Bhai. Okay, Gland Pharma has come out with a new injectable to cure vitamin K deficiency. 1.5% higher, 1801. K Fintech 1.6% higher, 1274. This is going to be a fresh high. I don't see any unusual names in terms of top gainers, but let's look at detour into FNO, and then again Devan Bhai will be talking about his experience in market. Delivery 1.7% higher, 386. Coforge 1.9% higher, 9167. Digit change in Coforge. Sakshi and I have been tracking it from 4,000 rupees, and every time we tell you about a digit change, 4 से 5, 5 से 6, 6 से 7 और अब 8 से 9 आपके सामने. Again persistent is a percent higher, 6420. Devan bhai, let's come to IT. Record high on the IT index, record high on the Nasdaq. You have to name a couple of stocks which can be purchased at current levels. This is a rally which is fueled by a lower rupee, in fact rupee at a record low, and of course the record high at Nasdaq. What is your view on IT at the moment?
So mid-tier IT companies which are pure focus on engineering R&D space and having a business model where they're catering to the niche verticals like autonomous vehicles or automobiles or aviation segment, entertainment segment, or even industry web for automation kind of processes which some of these companies are employing. We believe that the likes of Tata Technology, Tata LXC, KPIT, they remain, I think, relatively stronger play from the point of view of executing the business over the next 3 to 5 years in different verticals which I spoke about. So, in my viewpoint, I think this is a game of patience as far as I think making the reward out of this investment is concerned. These companies are definitely executing their projects well, their orders well, they book well. The point is that I think one will have to be patient about, I think they're executing it and giving you the rewards after it. Every successive year, I wouldn't be surprised if these companies end up creating profit growth in excess of 20%, which to me I think sounds a good music to my ears, because every 4 years' time, you're doubling the size of the book, which probably I think should work well for the investors, because I think that should mean that every 3 years, I think your investment should get double. If the company's book profit is getting double in 4 years' time, so probably I think one should be extremely comfortable buying into such kind of businesses, and that's where we believe that there is an opportunity exists in this market.
Devan sir, but why would you say that, probably IT looks more defensive than the other defensive sectors at this point in time? What is it that is, perhaps working well for IT that's not working well for the pharma or the FMCG sectors?
No, I'm not saying that it is not working well from pharma or FMCG. From a balance sheet perspective, if you look at all the pharma companies and FMCG companies are producing the profit at a growth level, at times I think may not be acceptable to investors, but I think they are producing profit. They are not going down on the profit making ability. That is one important point to observe.
Okay.
FMCG companies in particular may have relatively smaller growth numbers to talk about vis-a-vis the pharma companies. And within the pharma companies, the two segments clearly. The one which is with the specialty generic segment, where Sun Pharma, Dr. Reddy, Cipla kind of company exists, and one with CDMO and API segment, where the likes of DBs and the laws exist. I believe that I think in these two segments, there is a distinct amount of higher profit making ability and the growth that we are experiencing. But your question is very important and valid, because all said and done, everything is now in price. If you see, none of these companies are available at a valuation which is a deep discount valuation. Unless market gives you correction of October, November, I don't think that I think these valuations are very easy to buy into for making a return out of it in a smaller period of 1 2 years of 25-30%. It's not unless I think they report significantly large amount of growth. I think that 25-30% return may not happen in a year's time for some of these companies either. So one will have to be having, I think, good amount of patience on them as well. The mid-tier IT companies, which I explained, largely because I feel that I think there is a roadmap ahead for next 3 to 5 years, and they are likely to double the size of the profits in next 3 to 4 years or 5 years. And that's where probably I think we are likely to see the balance sheet or the portfolio growth happening for your investment. And that is why I put across, I think, the viewpoint that mid-tier companies might be giving a little better return in at least in select companies, if not all.
Devin bhai, what is your view on PSU banks? The third quarter numbers were excellent. Many of them announced a drop in GNP, of course, a very robust credit growth. Given that second half of the economy will see pump priming both by the government and maybe the corporate sector, what is your view emerging on PSU banks after this very sharp correction that we've seen over the last 5 months or so, ending November?
I would remain bullish, Shail, on these particular prospects. On one side, you have got almost 24-25% of the size of the book for many of the public sector banks is in all for sale available for sale portfolio. So, which means that if you have a tenure about 2 years to 4 years, and if you have 24-25% of the size of the book available for sale, if the bond yield starts, the interest rate starts coming down, bond yield starts going up, you are going basically to make the mark-to-market profit in your portfolio of your treasury government securities that you have invested in, and that, so which means that some of the public sector banks, though they are looking at whatever the valuation currently they are putting it, my take is that I think downside is limited. Upside could be gradual in next 6 to 8 quarters. I think they may end up giving 30 to 50% kind of appreciation, given the kind of turnaround which is happening in the economy also. At the same time, I believe that I think the stage 2 of consolidation is likely to come up, I think, from the finance ministry side, wherein the previous consolidation has yielded successful results for many of the public sector banks. Now they are likely to consolidate these banks into even further smaller cluster, which I would call it as, I think, about 5 large size banks cluster would get created, as I see. Should that happen, then probably it's a turnaround time for many of the public sector banks from the investment perspective. So keep looking for such opportunities. I would think in the near term, the immediate thrust will come because of the fall in the interest rate somewhere in February, as expected.
Devin sir, since you're talking about the PSU space, and we're keeping one eye now on the upcoming budget, which will be delivered on the 1st of Feb. Do you think the erstwhile favorites, railway space, infra-specific space, all the spaces where the government may allocate more funds will again come back? They're already showing us some signs. Should one really look at this as a medium-term investment idea to look at these spaces, infra, PSUs, railways, defense?
It's a fire bullet, Sakshi. I think this government has clearly said that till 2030, in the decade of 2020 to 30, the government is going to spend 142 lakh infrastructure and half lakh crore. There is no reason to not believe that this budget will increase by at least 10 to 15%. Given the size of growth that you are experiencing in the tax collection, the indirect tax as well as the direct tax collection, government is definitely expected to increase the size of the infrastructure spending in the current year, that is 25-26, as we talk about. Should that happen, defense, the railways, and other infrastructure business, including power infrastructure business, I believe that I think huge amount of order book is coming up, and that could possibly benefit many of the companies which are in the listed space. I would remain bullish about the prospects. I would remain bullish about the ability of these companies to execute faster and bigger as compared to what they are currently doing. If that remains a good possibility, certainly some of the companies would be a good investment choice in the portfolio.
Key stocks that you could mention, sir?
Well, I think different stocks are available in different brackets. Suppose if you are talking BEML, the company with the defense portfolio, mining portfolio, uh, uh, among others, I think railway and metro portfolio. I think if this particular portfolio of activity that this company is doing, they remain relatively, I think, on a stronger wicket from the perspective of executing faster. They are currently executing at around 20% rate of growth. One could possibly well argue that I think they may probably end up executing bigger than 20% of growth, given the size of orders and given the size of capacity that they are creating. So I think likewise there are many other companies which are there in the ancillary space to these infrastructure developers, and they could also be equally interestingly positioned. One of them could be, and I would say that SAN DLM, which got recently listed, holds the potential for a larger amount of execution and contribute to the railway segment and the defense segment as an ancillary. Uh,
Right. Devin bhai, one thing that's been very, very disappointing for a long, long while is FMCG stocks, frontline counters like Dabur. They're just languishing, doing nothing for the last, I hesitate to say this, but doing nothing for the last maybe 5 years. Look at Colgate, there was a very sharp rally, and that's been sold into. Look at Marico. The less said about Hindustan Lever, the better. And this news of the economy slowing down has further put selling pressure, at least in the derivative segment of FMCG. Anything that catches your fancy, what should be done for long term portfolios? Counters like Lever, counters like Dabur, counters like Marico.
so within FMCG, suppose if I have to select the segment, then I would be remaining distinctly bullish about the food as a segment, because over there, compared to the home care and the personal care, I would think that the food segment remains relatively, I think, a better position segment. However, they were affected last year because of the higher input cost, and as a result of which, consequence of which, I think the margin pressure came in. But that may be, I think, one of kind of a phenomenon. In the food category of FMCG business, there is a huge amount of upside potential, because as we adapt to the newer lifestyle and I think the newer way of eating, probably I think the companies which are in the business of supplying the solutions in the area of food, probably I think they are relatively better off. One among them would be Britannia, and second would companies are clear focus on this particular strategy. However, everything is in price. I must say that they are not making cheap, and they are currently quoting little expensive. But this market is kind enough in giving you opportunity during corrections. Should this correction give you opportunity 10-15% lower to the current prices? This kind of company should be bought into for the sake of I think earning 20-25% return over a year period of time. I think because otherwise the fundamentals remain very, very strong for the business segment in which they are operating.
Right. We also have Ms. Shibani Shorkar, Senior Executive Vice President, Fund Manager, and Head of Equity Research at Kotak Mahindra AMC. It's always a pleasure to welcome you, Shibani, and we do so with a record high on the small cap index. Fund managers such as you must be thrilled. It attracts more AUM, but as head of research, it is another headache in the making. How do you explain this conundrum, and what's the latest in your life?
And it's always a pleasure to be on your show as well. So, markets have been somewhat volatile, as you clearly were pointing out. I think for our markets, of course, there have been a mix of factors, both external as well as internal, which have shaped the movement over the last couple of months. But for me and for us at Kotak, one of the key factors that we are watching out is the earnings trajectory. Now, after seeing very strong earnings growth for Nifty as well as broader markets in FY23 and 24, the first 2 quarters of FY25 have seen earnings being muted. Now, headline earnings at Nifty level have been in the mid single digit. However, if you drill deeper and look at mid and small caps, the earnings disappointment vis-a-vis even consensus estimates has been actually even higher. So earnings have clearly been something that is, been one of the factors that have impacted market because delivery has been extremely muted. Now, from here on, if you look at FY25, consensus earnings estimates have been cut. So the expectation for 25 from a Nifty perspective is of mid-single digit earnings growth. And FY26 is for mid-teens earnings growth on the base that is muted for FY25. Incrementally, what we are watching out for is whether the festive season and the wedding related demand leads to improvement from a demand perspective and therefore feeds into better top line growth. The second factor that we are also watching out for is the government spend, which was absent in the first half of the year, and whether there is any pickup therein in order to meet the capex targets that have been budgeted this year. And the third factor is, of course, the rural demand with a good Kharif output and an expected output on the Rabi season, which is also likely to be fairly buoyant, whether rural demand does improve from current levels. So, yes, from a valuation perspective, if you look at markets, our view continues that large caps, which are trading at about 8-10% premium to their overall average history over the last 10-year period, are still fairly well placed. Mid caps and small caps continue to trade at multiples which are higher than their long term history. And as we were discussing, that given that performance on earnings for mid and small caps has been even more muted than what it has been for large caps, in this segment, one has to be extremely stock specific and bottom up in terms of our approach to the overall portfolio construct.
Good morning and warm welcome, Shibani. We'll continue our discussion, but let me just mark the markets at the open, 24,643 for the Nifty. It's flat and now turning positive. It's the IT space that's definitely hogging the limelight yet again after record highs yesterday. 0.7% of a gain coming in just in the initial few minutes. The top stocks that are actually doing very well at this point in time in the IT space are stocks like Tech Mahindra, Persistent Systems, Emphasis Coforge, something that we've been consistently marking on the channel for all our viewers, LTI Mindtree, LTTS. You also have the heavyweights, TCS, Wipro, Emphasis, in gains of 3/10 to about 6/10% higher. HCL Tech also with minor gains coming in, but across the board, there is a substantial move on the higher side. Let's look at some of the other pockets on the Nifty which are doing well. So on the Nifty, you have stocks like Hindalco, that's up by 1%. Bharti Airtel is recovering, now 1.2% higher, apart from the IT names. Then you also have stocks like ONGC also recovering in trade. IT, metals, pharma, realty, these are the pockets that seem to be hogging some limelight in the initial trade, whereas oil and gas and auto stocks are seen slipping in the opening action right there. Within the top stocks on the F&O space, you have Delivery that's shooting up higher, 2.7% up. Marico from the FMCG space is bulling up as well. BSC is coming back 2% higher. You also have stocks like Shriram Transport Finance also pulling up in trade. Remember, yesterday it was the railway pack that continued to move up. Today again you have IRFC that's up half odd percent higher. Defense space, you have half odd percent move coming in on HAL again. So these two pockets continue to be in some momentum. Let's also look at, so Jupiter Wagons after that 12% surge from the railway pack is again up about 5 odd percent higher in trade. So those are the spaces that continue to hog, and we will continue to discuss that as well with Shivani. Let's also look at the broader markets, how some of the stocks are moving up there. So you have several stocks that are pulling up. Anything that needs to be in a special mention? Not really. Let's actually come back to Shibani right there to discuss some of the other pockets then. Shibani, first up, the railways